Hi, and welcome to another monthly market update from Richardson Financial. I'm Bryan Becker here with my colleague Dan Brown. We're going to talk about what happened in the markets in February 2022. Dan, we saw a lot of volatility this month as the markets bounced around what started with inflation and interest rate concerns and really moved on to having the Russia invasion of Ukraine consume pretty much all of the conversation the remainder of the month. Let's talk through what happened with the markets, interest rates, and what the overall economic outlook looks like.
So Bryan, let's walk through the month chronologically. We started the month with investor concern over what path the Fed could take as far as raising interest rates. We fully believe that they'll begin raising interest rates from near zero at the March meeting. There's a little bit of investor concern about whether it could be a quarter point or a half point. We're really not concerned about that. We're worried about the longer term impact of interest rates and Fed funds. And broadly speaking, as we look out over the next year or two, we still think that monetary policy and the interest rate environment will be broadly favorable to the stock market. And then mid-month, investor concern switched to the potential invasion of Ukraine by Russia. And sure enough, late in the month, we did see that. The day before we saw the invasion, we saw the S&P 500 dip into correction territory. So down about 12% from the early January high, and the stock market globally, many of them had also corrected. And then we saw the market rally shortly after that because we kind of came to the conclusion that the invasion wouldn't be a full-scale war, more of a limited military conflict. So during the second day, we saw that they were, talking and hopefully resolution to the conflict. And we're very encouraged by the fact that Western governments rallied on the side of Ukraine and issued some pretty harsh sanctions against Russia. And the economic impact of that, we think, is going to be that inflation is going to remain higher for longer because of all the exports that Russia has that are very important to the global economy, especially Europe. So some of those commodities that we're talking about include oil, natural gas, some soft commodities, grains like corn and wheat, and also some metals. So we think the outcome of this economic outcome is going to be inflation higher for longer, but it's not going to be high enough inflation to tip the U.S. economy into a recession.
So Dan, you just mentioned that we're looking at this Russian-Ukraine conflict and wondering, is it a war or is it an invasion? What's the difference between the two and how has that impacted global economies and global markets over the last 50 years?
Yeah, so we went back and looked at the last 10 military conflicts, many of which the U.S. was involved in from 1970. And the results are pretty convincing that these brief military conflicts don't really impact the business cycle negatively. Mm-hmm. And we're hoping that this time around, the outcome is going to be the same. So we're encouraged by the data that we've seen. We've also looked back even further to full-blown, world wars, Vietnam War, and again, the outcome is the same. So we're encouraged that hopefully this will be a fairly limited military conflict.
So Dan, in summary, inflation is going to be higher for longer. We're keeping our eye on the Russia-Ukraine conflict to see if those sanctions or if that conflict breaks into a war or anything that would cause us to change our opinion. But by and large, neither of those two things are going to throw the U.S. economy into recession, right?
Correct, Brian. That is our thinking at the moment. So in spite of the fact that inflation's at a 40-year high and probably will go higher over the next few months with those sanctions kind of biting those exports from the Russian economy, especially as it relates to Europe buying those commodities, we still don't think that's enough to put the U.S. in recession over the next year or so. There's still a lot more positives than negatives. So starting with the positives, the labor market in the U.S., very strong. Employers adding jobs fairly significantly on a monthly basis, unemployment rate down to about 4%, and job openings over 10 million. We see corporate earnings very strong. We just finished fourth quarter earnings. Again, we see a pretty decent outlook here over the next year or so. And lastly, we see that Omicron cases are going down. And as the economy and consumers feel comfortable traveling again, we think that there's some pretty decent pent-up demand as spring and summer approach here.
That is our summary of the month of February 2022. I'm Bryan Becker. This is Dan Brown from Richardson Financial. We want to say thank you for joining us. We'll see you next month. And if you can, before you click off, go ahead and like and subscribe below. Thank you.